Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. Hopefully, lots of great ideas and opportunities for you throughout this show. So the stock market waffled last week as focus remained on interest rates, trade talks, the Iran deal, oil prices, and now bringing in problems in Italy. The rumor mill was going full blast when it came to trade, as there was rumors that came out on Thursday, late Thursday overnight, Friday morning, that Iran had offered a deal where they were going to cut the trade deficit by $200 billion. Well, even the White House came out and said that sure sounds impossible. And then on Friday, China came out and said, well, that's not true. They simply denied that. So stock market kind of bounced around based on that news. As far as Iran goes, well, of course, the U.S. out of that nuclear deal, but the Eurozone is in. And the Iran oil flow, which maybe not coming into the U.S., looks like it's going to keep going into Eurozone and through them the rest of the world. So between that, Saudi Arabia willing to up their production to meet any problems that may come out of the Iran problem, or even out of Venezuela, and there's some other areas in the world that are having disruptions. Still, the U.S. shale producers, of course, when they get up to these levels, picking up their production, and it's going to be really very hard without bombs flying to get the price of oil much beyond where it is right now. Bombs did fly. Actually, today, nobody really knows yet what happened, but in Syria, in the area of some Iran air defense deployments, there were explosions there, and you can just guess that it's Israel trying to do something to be preventative from anything that Iran could pull off there. So there's always that problem there, and oil prices without it likely are going to stop dead in the water right here, and maybe even begin to pull back. We'll show you what that looks like on our short-term view of the next week. As far as Italy goes, their populist government now taking control. They're very anti-Euro, and some of their policies that are coming forward are scaring the banks and investors in their bond market, which is crazy high. Their yields crazy low based on their poor debt structure. Their banks and bonds falling very hard this week. Shades of the Euro crisis that we had, and don't be surprised if this starts to really come up and apparently looking like it's going to bother the market. And interest rates may be the biggest factor of all, as the 10 years now move over 3%, in fact getting as high as 3.11 in the last week, and that has much bigger competitions for stocks as the S&P dividend yield now drops below the 3-month Treasury yield. So when that happens, you've got to be wary that when you're at all-time highs or near them on the Russell index, and very close to it on the NASDAQ, then you've got to wonder whether investors are going to start to say, hey, maybe I want to be a little bit safer in here, and then start to move money out of stocks and into bonds. The Russell 2000 doesn't matter, ignoring everything as it moves towards an all-time high here on Friday. And while the high caps essentially flounder, that happens. The Dow Jones Industrial Average only making an upward correction from that corrective decline of about 50% comparative to a new high in the Russell. And that's almost 2,000 points off of its all-time high. So we have a big disparity in the market when we look at this. And disparities are historically mostly bad for markets when they're at the high, and tend to be good for markets when they're at the low. There were disparities at the low in 2009, and now there are disparities at these highs here in 2018, 9 years later. Interesting, the Fed is still in that 9-year period pretty much down to the rates being low, very low historically, and still in their great experiment and trying to figure out how to neutralize, get neutral without inverting the yield curve and without scaring investors off, because they don't want to see the markets move to the downside because they don't have any bullets to protect it anymore. So the question is, will these small cap stocks that are driving the Russell be able to lift the high cap or the heavyweight stocks? Well, that's like my wife picking me up and carrying me around, and I'm 100 pounds more than she is. So that's a tough job for the small caps to be able to do that. And often when the small caps are moving alone or strongly in relationship to the other indexes, well, that's some sign of being late, really late in a market. So our work says that the stock market is likely to have a further correction down into June, and we're going to stick to that until we have some good signs that the broad market has made its lows. We don't have that yet. Not far off from it, as it has improved, and we have raised our downside projections, but we think that, at some point here very soon, the Russell strength is going to go away, and then the market will have another leg to the downside in this corrective period into somewhere like mid to late June, and then a better second half is what we're looking for. Let's take a look as we look at our 60-minute chart of the S&P 500, which has a good picture of what happens overnight and then what happens during the day. When the white area is the regular pit traded time period, as we say. And you could see here what happened was that trade tensions were easing here on Sunday night, and we got a pop in the market. Now the market's held up until the second hour right over here on Monday, and then began to move to the downside. And they actually fell right through part of Wednesday. We thought the market would be weak in towards the end of the week. You could see that it's tried to rally during the week, but it was really a choppy week. What really hurt the market right over here was that the yield curve got near 12 basis points right there. And right now the yield curve was more like about 14 basis points, but that really got scary. The dollar jumped big time and gold cracked. I mean, that was the day that the biggest moves came in every single market. And you could see in here that pre-opening, you got this big sell-off in the first hour right over there, and then it chopped most of the day there. Relief came here on Wednesday as the Russell started to move up strongly and then made a new high. The Russell overperforming every one of these days in here that we're looking at, as we got a good lift here, and the NASDAQ got a good lift there on Wednesday. That was the good day for the week. Here's where the news started to come in about the Italian politics and potential leaving the euro, and their bonds and their banks just got smashed right in here, and you could see how that affected the markets overnight. But then here oil started to really pick up, and the energy stocks exploded along with the Russell again, and that gave you that big 2 hours right there, and then all of a sudden oil started to soften, and the NASDAQ with it. And you could see is the oil, the energy stocks have really been helping the market pretty significantly, and of course the Russell. And then when they start to get softer, the markets then pulls back. So we had that big drop in here as S&Ps moved down about 20 points intraday, but they don't really stay down much right now. They move down, and then the buyers come back in, and the market markets get choppy. Here's that news here on Friday that there was that report of the China deal, which was total crap, and then they denied it right over here, and you could see that basically was the high in the futures for the overnight session and for the day. And then for the rest of the day, it's been choppy. There has been a couple of down swells in there that got the S&Ps down around 10 points, but the market keeps trying to come back. And it doesn't seem really motivated to have any kind of a significant move right now in either direction. And when I show you the daily chart in the short-term view, you will then see the change has been really narrow in a lot of the markets. Well, maybe not so much in the gold market or the bond market, because they had some pretty good downside moves. As far as the markets go for the week, well, the stock market, we'll call it mixed. The S&P 500, NASDAQ, and the Dow Jones fractionally to the downside. The Russell up just over 1% right now as we're halfway through the day here on Friday. Bond market, the 30-year down a solid 2 points to the downside. 10-year yields, they jump up, like I said, to 311. They're trading about 307 right now. So that was a pretty solid 12 basis point gain, or 10 or 12 basis points that they jumped on the upside. And that yield curve stabilizing right now, as I said, at about 14 basis points between the 10s and 30s. And that's a little bit nerve-wracking for the Fed, for sure. Dollar still, marching to the upside, gains over 1% on the week as the higher interest rates are attracting money out of other countries into the U.S., and gold lost about $27. Silver down 24 cents. Now, I'll show you later in the show that I think we're in a bottoming period right now. That's when acceleration comes to the downside, and acceleration then changes to the upside once that's over with. Well, silver's down 24 cents, but here in the last couple of days, it's giving some signs that the worst of it is over for silver. So that could be some good news. Oil up over 70 cents, and overall, that traded on in a pretty narrow range for the stock market. So that's it. That's the opening segment for the week, and we're going to be right back with the best and worst stocks for the week. All right, for the best stocks for the week, we're going to take a look at those stocks that had decent chart patterns, or that had some big moves based on some news, and there was not, for the best and worst for the week, there was not that much really that I could say that went on that was that good. Let me just line up my chart here for you to see right now, and the moves were on some things pretty big, but the best ones were the driller stocks. And of course, as oil firms up, the drillers tend to do well. They've come a long way, and their earning power hasn't been that good. So you've got to wonder whether they can continue. And some of them have gotten into some areas that are pretty good resistance. Again, we're looking at cycle analysis when we look at this, and the core of our work is done on weekly charts when we look at some nearly 400 symbols. And then our rankings and trade setups and our charts that we share with our level 4 members, which you can have on your TOS platform for a special. All you have to do is send me an email, slim@askSlim.com, and I'll send you a special to see what we do for 1 month. So I think you would enjoy that. So let's take a look here, and you'll get an idea what I'm talking about as we look at Noble Corp. So our charts have a lot of things in them. They have the cycles, which are, these are the cycle brackets, which are ideal cycles. And then what we do is show not only the ideal cycle, but how in actuality the cycle traced out, like you can see right there. And if we have an ETF that applies, we're going to put that on there, and right there you see the OIH ETF, which is that blue dotted line. And you can see how there's some what we call synchronicity, where the OIH IH, of course, and the NE, Noble Corp, trade somewhat similarly, as the stock will trade in synchronicity with the group. Now, we had an interesting pattern in here because usually when you have a low and then you get another low here that's lower, you get this kind of negative look to it right there. It didn't really break underneath by much, but you usually don't exceed the last high when that happens. Well, in this case we have. So it's probably about a 1 in 5 probability that would happen. And of course being driven up by the price of oil and a stock that was relatively cheap, but now it gets up into this intermediate resistance zone area. And this is really where we think there's a good chance it stops. Here's a 161.8% fib extension, which is often a target level. So we're saying 6.5 to 680 on this stock is about the best, and you could see our projection in here as we think it's going to roll over. But up 13% on the week, and the best performer out of our 400 symbols or 320 stocks that we look at. Neighbor NBR also in the same category. You can see here this is a much better pattern, and what you can see in here is how cycle patterns create head and shoulders or inverted head and shoulders. So right in here you can see a neckline and an inverted head and shoulders forming and looking like it's trying to get up through it right now. So and what happened was that, you know, this cycle made the left shoulder as it rallied then, and then finished down here, made the head, and then this cycle here takes it down, makes the right shoulder. Cycles make these patterns, and if you learn cycle analysis, you're going to have an awareness of the market that you never had before. Make sure you take my workshop to learn that. If you don't know how to get to my workshop, send me an email, slim@askSlim.com, and I will tell you. So here is the upward turn here, and it comes right at this point at this rising cycle phase right there. And you can see we have it projected up to the major 38, which is at right around $10. So it's trading at $8.42 right now. This one still has some room to roll. You can see that. So this is a good pattern. It built a beautiful base that you can see right there where the cycle was configured higher. In other words, its low was higher. It shows upward direction. And if you were to extend that into a channel, it would essentially look something like this, and you could see how this cycle right in here resolves itself to look like this right in here as you have an upward component pushing it to the upside. So that's a little cycle lesson right there and a bullish looking pattern. All of the next stocks for the best of the week I'm going to discuss with you are retail stocks. Nothing else really that much to talk about. Macy's gets a pretty good jump, up about 11%. You can see the beautiful cyclicality in here as there is a major and a minor cycle. They're both pushing up right now. It gets up right over here to that major 61.8% fib right over there. And you can see that we're getting into a period where we believe that this mid-cycle corrective period is coming. Here's the mid-cycle corrective period right over here, and you could see it brought that pullback. Here it is right over here, and you could see it brought that pullback. So we think it's going to peak in here and then pull back. The competitive environment with Amazon literally murdering everybody is just too much. Earnings beaten here, and that's why the stock got a lift, but we're not all excited about it at this level at all. AEO, another one that has had a giant move in here, and you could see this gets up to resistance level also as it gets to this fib confluence level. Maybe it gets up to around the 24 area. It's trading 23.20, but again, that's the spot we think that it would roll over. We'll call this up 10% and in a tough spot. GPS, as we stay in the teen retail category, well, this one gets a lift in here as analysts have upgraded it, and our chart says that this is a premature rally. and that the lift that you're seeing right now has a high probability of failing. Now, the reason I say that is because if you look at the timing on these lows right over here, you can see that right there, and that right there, and that right there. And there are often times that you get, you know, bottoms right in the middle of cycles, but then these corrective periods at the end take over again. You can see every one of them brought a sell-off, right? Every single one of them over these last 2 years. So that's where we are now. It is unlikely that's the low. It is most likely it rolls over again and moves to the downside. So Gap Stores, this is not a good pattern at all. We're just going to stay in the teen retailer. Urban is another one. This one up 7% on the week, and that's not Urban. Promise it is coming. There you go. So look at this. It moves up in towards that 61.8% fib extension. It is very late. Now, this cycle in here was extremely bullish. Now, a lot of people would say at this point, wow, this stock is super extended. It moved up from 16 all the way up to 36, more than a double. However, this is what we call a right-hand translation, and the probability of a failure after a right-hand translation is very low. Usually you only have a little time left to correct and you get into the next rally phase. Look at how exactly that happened. But now we're getting back to this corrective period. So every one of these retailers I'm showing you look like they've had good rallies, but they're also in areas where they're very likely to pull back. I don't think that we're going to get much leadership out of retail anymore when I look at this. Target is another one. This one likely, you know, based on cycle theory, because this was a bullish cycle, then the next one was going to be a bullish cycle, and then the next one is likely going to top the test the resistance zone here. So I wouldn't be surprised to see 78 on this stock, and then as you could see rolling over as our projection shows. Analysts upgrade the stock, earnings coming out on 5/23. Based on that, I wouldn't be a bit surprised to see earnings take the stock lower based on what I'm seeing here. So that's a look at Target. We're going to stay in retail here. UAA, Under Armour. And we talked about Under Armour 2 months ago and said that it was building a base and it was likely to rally. Here is the beautiful picture that we're looking at right in here. Let me just take a little closer look so that you can see. This base built right in here, it hits the support zone and then rallies, takes out that high right over there. That's exactly what's supposed to happen. And this one projects up to like 25 bucks. So I think if Under Armour gets a dip, I think it is very viable and a very positive pattern. Dillard's we talked about during the week and last week, and tweeted out about it, and we said everything that we're looking at here says that this decline in here is a fake. We liked it, and sure enough, look at this. So it gets right into our buy zone at the end of this corrective period. You can see the 2 cycles in there, that little light dotted one. And then getting into this rising phase, we thought we were getting there, and a beautiful rebound as it moves up from 67 to 77 in 1 week, gaining about 7% on the week. That's in a week and a half. So this week it's up about 7%. And that is a really good pattern and followed what we were looking for, well, spot on. Really happy when that happens. So now what we're going to do is get into our worst stocks of the week, and I've got maybe a little bit more to show you. All right, so our worst stock for the week, Applied Materials, AMAT. Now, when a semiconductor material stock does poorly, it's often a sign that the group is in for some trouble. Now, the pattern that we had in Applied Materials we thought was negative, or at least topping, and had given some pretty bad signs. And this stock drops 4 points, almost 8% here on Friday, as their earnings beat, but analysts are now downgrading them because they were not optimistic on sales growth whatsoever. And has been a worrisome pattern, and now is even a more worrisome pattern. So what makes it bad? Well, first of all, you can see the megaphone that was forming in here. You can also see that it got just slightly above that high and then reversed and came to the downside. Now, I just made a point about declines that come in the middle of cycles right here. Usually when they rally, they fail again because they have all this time to fall, and that's what's going on again. We expect the stock to trade to 45 or lower in this next month because the timing is for late June for this decline to be over with, at least this phase. And then you see we have a rebound from late June into the summer, but based on this pattern we're looking at here, we'd expect the rebound to fail and then another downside move right over there. So this is a bad chart. We were looking at it as trouble, and sure enough, there it is. In the gold materials category, AU is the only one we're going to look at in gold. We were looking for, this is down 9% on the week. We're looking for a bottoming period to be coming in here, and this hammer didn't work yet. So we're looking for a bottom, and that may be 1 or 2 weeks away, maybe even 3, based on the timing on here. But then we think we're going to get in a rally, and we think some of these stocks are really in decent shape. I just told you I like silver as bottoming, and PAAS is one you might look at because that's creating a pretty positive pattern. Newmont's not a bad pattern either as far as that goes. Now, Tesla is a story worth just spending a half a minute on here, because we've been negative on Tesla, and of course investors have been loving it because of all the potential that it has down the years with basically being the technology company in automobiles. And their Model 3 is a good car, and for $35,000 you don't really get the Tesla, all the equipment and everything that makes Tesla the great car that it is. And the Model S, of course, super expensive. And all of those sales based on the government giving money towards each of those sales, and that's ending pretty soon. And then Tesla's going to have to make it on their own, all the companies with electric cars. And there are tons of them coming on, great electrics and great hybrids that are huge competition for Tesla. Tesla having huge production problems, now saying they're getting up to producing 500 cars a week pretty soon. And then they will be at the halfway point of what they predicted on their production. And then Goldman Sachs comes out this week and says they need to raise $10 billion because of their cash burn. So the stock moving down pretty significantly on that. We put in a target for this year of 220 or below. And this stock on our riskiest for the year, not all of our calls so far have been this great, but here you can see the pattern in here. Now, I'm just going to take a closer look. First of all, it's very clear. You could see the downtrend in there. Now, what really has us negative is that this major low, where this came in and nested and then rallied right over here, that's this right over here. This cycle right in here broke down. You see that? So that makes this downward channel. Then when you get this rally right in here, it says that it's going to fail in resistance. There's the 34-week moving average. There's the 61.8. There's the 50. We have this resistance in there for a long period of time. It rolls over in a big way. And the odds are it declines here out into September. The bottom of this channel is sub 220. So that's what our projection is in there. I think if Tesla gets any kind of a rally in here, it is a screaming sale. This is one ugly stock. And even more in the potential for a crash stock than it is for any kind of a significant rebound. I mean, I'm saying 220, it could be 150. So I know you're going to say I'm nuts and extreme, but you don't know me to be extreme. I don't really do that. And in this case, when I see a lot of risk and a very high risk period that we're entering into here, that's when I really throw up the flag and say, be careful on this one. Nordstrom is an interesting story. Also, they've been trying to go private and have not been able to raise the money to do so. So the investors have really gotten cross-roughed in here, where they said, here they're going private, the stock went up. Here they say they're going to postpone going private. Here they confirmed that they were close to going private, and then they came out and then said, well, they're not going private. They couldn't raise the money. And then in here, their earnings came out, but their sales growth were only up 0.6, way below what their estimates were. And now you have this cycle low breakdown. You can see that right there. And what that says is that it declines out into July. Now, unless they get somebody to buy them or give them the money to go private, which is pretty unlikely, this stock has got a lot of trouble. It's in a support zone right over here, so maybe it gets some support down to about 44 bucks. But we think the risk is really down to about 41 when we look at that. Celgene, CELG, in the biotech category. This is so interesting for the purpose of learning cycle analysis, and that is, look at the positive cycles. You see the higher bottom, the higher bottom, higher bottom, higher bottom. Each one of those higher highs, upward channel that gives you the directional component. It's just screaming at you how positive that is, and then it breaks down, breaks underneath that cycle low. That's our message to our subscribers, that cycle low violation came, which is negative. It's the first one that happened there, and then it plunges down through these supports that we had in here. You then get into the next cycle rally, and you would expect it to fail around the area of old support. It does, and gives you another big decline. Now you have another failure going on right now, and this points to the earliest low, early July, and that means the stock is likely still in trouble. They have been branded a generic drug obstructor, and essentially that means they're blocking access to the generic companies to be able to see their product, to be able to then create generics down the road. So the stock has been sick. It looks sick, and likely to be in some very continued trouble out there. You can always get a company like this that has this miracle drug that comes on and the stock spikes and all of this changes. The probabilities of this stock is going to keep going down. Home builders overall down 4 or 5% because, of course, interest rates going up and gets harder to buy homes. Their home sales are pretty good. There's a scramble to get in and buy these before interest rates go even higher. But the investors don't like to see these interest rates going up. Actually, we put out a trade selection, in other words, and that was a favorable one in TOL, T-O-L, this week for our members. And you become a level 3 or 4 member, and you get our rankings and setups and some great information. Of course, all of our videos as far as that goes. So well, that is it. That is the worst stocks for the week, and I'll be right back with our short-term view for the coming week. All right, our short-term view for the coming week. Before I get into that, just a couple of announcements here. Our website had some difficulties last week because our hosts crashed, and that caused some contamination for us, and we don't like that. We want to make sure that our subscribers, our users, get the best possible experience with us that they can. To do that, we are changing hosts this weekend. So from Saturday about 6 o'clock Eastern time till sometime overnight Sunday, maybe into Monday morning, we are going to be going to a new host, and that migration takes some time. So you will not be able to access our website during that time period. So a lot of you are probably now watching this on YouTube, because the access to our front page on the website will not be there. And I encourage you to stay away from our website for the next from late Saturday through late Sunday or Monday morning, because if you get to the website too early and your own ISP then tries to cache our site, it's a mess. So just don't go there, and come and visit us and sign up for our products and everything as far as that goes on Monday, and I'm sure you're going to get a great experience then. Follow us on Twitter at askSlim, and make sure that you become a subscriber on YouTube and give us a thumbs up for this video. And one more thing, and that is, of course, we have specials. You can try us out. We're extending the special on the stock index report, which is a phenomenal report. You're going to get things on our charts and momentum that is just unbelievable. You'll have a great understanding of the markets. This is for people of all levels, and because our website difficulties, we're going to push it out 1 week for our special, so you can get our stock index report for $15 a month, and you'll be grandfathered in at that price. It's fantastic. So write me at slim@askSlim.com, and I will send you a special link, and that'll be yours for that price for as long as you want. Cancel it at any time also. As far as our other specials, we have specials on level 3 and level 4, our rankings and trade setups, a fantastic table that you get to see with 3 different time frames, and our option bias indicator, and our setups that we do 2-3 times a week, plus all of our videos, like 300 videos that we have in the website plus. So unbelievable learning experience for you. Or a level 4 where you can get our charts on your Thinkorswim platform. TD Ameritrade and Thinkorswim are preferred brokers, so you can get our specials on those, half price for 1 month to try them, level 3 or level 4, and just write me again, slim@askSlim.com, and I will send you those specials. And that will be on Monday, because my email is going to be down also. So just sneak in, get that email to me, or else wait till Monday, and then let me know that you're interested in the stock index report for $15, or our specials half price on level 3 and level 4. Write me on Monday. That's really the time to do it. All right, so now let's get into our look at what's coming up for the short term for the next week. I want to call my performance substandard last week, 40-45%, the way it followed the patterns. The dollar was stronger than I expected, or maybe it's the bond market that accelerated to the downside and that made the dollar stronger, made gold weaker. So we didn't do great in those areas. The dollar we got completely wrong, because we thought it was going to be starting to correct some from that level, and that really threw us off. As far as the stock market goes, we thought it would be a down week. It is. It did not get as low as we expected, so we only get half credit for that. And as far as the oil market goes, we're only going to get partial credit for that also. So overall, 40%. We've been running about between 65 and 80% pretty much for weeks and weeks. So we're going to have an off week, and we're going to be a lot better in the coming week. Let's take a look at light crude /CL as we look at the daily chart. Our short-term work is done on the daily chart. We do work on interdays, but we don't share that with you. Though on the stock index report, we give you a picture of the 2-hour chart and momentum on 2 hours for intraday traders, which would be your dominant chart. It tells you direction, whether you want to be long or short in the stock indexes, and we give you our market condition indicator for that day when we update that during the week also. So you'll be able to really have a good sense of some intraday information on the stock index report. Let's take a look at light crude, and you're going to see that it didn't go very far. I mean, it just really has been stuck in here, but edging up and keeps making a new high. And this pattern in here is still positive. You can see this upward pattern right here, and then the next one right in here. You could see the slim ribbon right here giving you all positive. That's why these bars are all green, because the slim ribbon colors them green. It also colors the volume bars green right down over here, so it just screams at you the positive momentum when you look at that. And now it points to, see this corrective period here, it's not going down yet. So it says maybe a day or two, a little bit downtick here, back into the slim ribbon, and then up again. That makes for a narrow range over here, unless of course Iran starts to bomb from Israel, then everything's going to change and these prices are going to go up. So right now you can see it's still a positive pattern. We're looking for a narrow week. Momentum still pushing up, and correction looks like really minor, and then try again to the upside. So basically the range we're looking at, potentially worst case around close to about 70 here, and that's about the worst. And then the upside maybe about 72.50. We don't see it much better than that here. So that's cause for a pretty narrow range this week. A lot of what we're looking at in here is calling for a narrow range. The next thing we're going to look at is the dollar DXY, and we'll get a closer look in here. Man, that looks a lot like light crude, doesn't it? So we're looking here, you can see this purple, that was a shifted cycle, and we put a note in here on 5/18, which is today, that the older cycle is taking dominance again. So you could see the alignments in here of this cycle right there, and then the next rally, and that puts us in a place here where it's likely to start to roll over. Now I'm going to trace out this cycle right in here and then right in here. The question is, does it roll over here by a little bit, then has a pretty good rally, and then rolls over again? That to me is the greatest likelihood that we're looking at in here. We're going to remove this because it's not following it anymore on the shifted cycle, and that really says to us this coming week we are likely to see it roll over. Now, one of the really consistent ways that we can say that is our option bias indicator, the OBI, is extreme overbought. Now, when it was extreme overbought over here, it only gave you a few days on the downside right over there. So sometimes when it's really strong, and here's your slim ribbon right over there where it turned green, and that is usually strong, you can see that, then you get support at the 13-day moving average, and that's like right over here. So that's trending up that way. That would call for just a minor decline in here, maybe just under 93, and then another rally over here, and that's where the bigger risk comes in over there. So that's a few weeks out. So we're just going to call it rolling over, the overbought situation, fighting an uptrend in here of really positive momentum, and then again that usually brings you a narrow week. So we're kind of thinking that if you trade 6E as a proxy, you've got exactly the opposite thing going on. Here's your bottoming period right in here. You have an extreme oversold condition on the option bias indicator right over there. Make a little more room for you to see that, and likely it's turning up. So that's our projection right over here that says it probably can get up here in the next couple of weeks to about the 120 level as the dollar corrects. But again, just opposite of what we see in the dollar. Here is where the slim ribbon gives you the negative momentum signal and then begins to widen. When the slim ribbon is chopping and not widening, it's not giving you any valid signals right in there. But then when it does this, you know that there's trouble, and that's what happened. Now, quite oversold right now and likely to get a bounce. So between the dollar and the euro, inversely correlated, we think narrow ranges, downward momentum in here, fighting against the upward cycle makes for a narrow range. The same thing for the inverse in the dollar. The next thing is the gold market that we're going to look at. And we'll just look at this beautiful harmonic family in there. Now, we have been talking about gold being weak into this nested period right over there. Gold 2 days ago became extreme oversold. And it is just stalling. It's not going anywhere. You can see those three little triple stars right there. Now, a triple star, those doji spinning top bottoms right there, followed by a good size up day, is a solid bottoming pattern. We need a good up day Monday or maybe Tuesday in order to lock in the bottom there. Silver is giving us a little better signal than we have there, but the bottom is due. We're going to call this a bottoming week, inverse to what we said in the dollar that we think is rolling over. Downward momentum, likely to keep it right now from getting very far until the momentum improved. And as far as silver goes, we think silver's probably got a shot up at 1680 pretty soon. Why don't I just show you that instead of just talking about it? and that's the resistance zone that's right in here. That's 1660. That's the 50%, 1677. So the projection is up into the middle of that zone right there. You could see the bottoming going on here. It looks better than the gold market does. If it gets underneath 1618 again, well, that's going to be aborted. So we're going to be watching that, but it does look to us like it is beginning to bounce. As far as the bond market goes, we have been super bearish on it. It's been spot on correct. Look at the small patterns that we're looking at right in here. So that's, you can see me highlighting right there. There are 1/3 cycles, so 1/3 harmonic in that bigger pattern, and they call for a rally starting today. So what we said last week was that we thought it would chop around during the week and then turn up. Well, it had a very big decline there, bigger than we expected, because we actually upgraded our downside projection last Friday from to about low 42s from low 41s, but it gets down to low 40s in here, 40.05, and then gives you this, see that pattern right there? That is an engulfing pattern right there. That engulfing pattern says to us that it is likely a bottom, a little short-term bottom to get into this minor resistance and sell zone. 142.05 to about 142.22 would be where our target is, and that would be the sell zone that we're looking at, and that it's likely to roll over and get another decline. When I look at this and highlight it, this says 3rd week of June before the low is really made, and that's kind of what holds up as far as the intermediate patterns go. So we still think downward chopping here, and if we get a good rally, it is a sell in the bond market. So that's a look at multiple time frames on the daily charts that have been really guiding us really well. So now we'll talk about the stock market. We thought the stock market would have a down week, like I said, and go down to S&P 2682. The Russell has prevented any kind of a real downside. Every time the market has a downswell, the Russell starts ticking up, and the traders just buy because they're afraid to sell in the face of the Russell being strong. Rightly so. So we have seen a week that has had some choppiness in it intraday for that reason. Now, we have some pretty good clarity here right now in the cyclical patterns that we're looking at. You can see the dominant and the minor cycle, how they line up, and now what we're looking for, and what we had thought was it was going to come down to that support area 2682 right over there by the end of this week. But you can see the slim ribbon right there turns positive and widening, so that has held it up. And like I said, the Russell moving to a new high has done that. So we're getting into the last 1 or 2 days right here, and that we're suspicious that, you know, if it can get down to this area of about 2681, 2682 Monday or Tuesday, that it will go right back up. So this pattern right in here, right, fits. Here it is right in here. It was a minor dip and then went right back up. This is similar right in here. A minor dip and then right back up. We're looking for a small week. In other words, down a couple days, up a few days, and then this is the risky period right over there. So for the next week, we're going to call it small change. Try to sell off, not be able to sell off. Try to rally, not be able to get very far, and a really tight range. If you want to see our more in-depth weekly analysis, cycle analysis on the bigger charts, we do that in Future Speak. So if you become a level 2, 3, or 4 member, you'll be able to see Future Speak. And the stock index report, $15 in the special, it is also included with level 2, 3, and 4. So if you subscribe to any of those levels, you will also get the stock index report. Just a phenomenal report. And it comes out on Thursday mornings, and then we update it on the weekend. You get a picture of all of these charts, and you get analysis. We tell you what we think the charts are saying, and then we show you momentum indicators that are really good. Great visual on that. So great stuff. Write me for any of those specials or for the stock index report And I think subscribing to our content will give you understanding of the market that, well, it's just really hard to get. I share with you what I have learned in 44 years. And if you're struggling in the market, struggling to get where you want to be, my trader psychology videos are just outstanding. So I've been a trader coach for decades. I've been a trained certified facilitator in personal growth work for 22 years. Just a great stuff in there in the trader psychology. And we have 8 categories of videos. So do become an askSlim member. You'll get information that you're just not going to get anywhere else. That's it for the week. I hope you have a great weekend, and hope you come to our site, back to our site on Monday, and everything is running smoothly. I want you to be careful because it is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to the city and I'm going to do a city show.